Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 15th of August. It's been a fairly positive week. A word which we've become used to, inflation, has been centre of the news, but not necessarily for the reasons we've been seeing over the last few months. Indeed, there was an inflation print in the States in the middle of the week, which, while it was strongly higher year on year, it was less high than expected, and indeed, month on month, the reading was actually flat. This put investors into a spin, excited perhaps that inflation may have peaked. Now, obviously, one economic reading can't be taken in isolation as to start a trend, but it was nonetheless a positive sign that perhaps, just perhaps, inflation is starting to turn the corner. Another outcome of that was that the expected Federal Reserve hike in September, the consensus is now for a hike of 0.5% as opposed to the 0.75% that it had previously been. So a number of growth stocks in particular got something of a boost. That being said, of course, still a long way to go to recoup losses from the year so far. Indeed, in the year to date, the Dow Jones is now down 8%, S&P 500 down 12%, Nasdaq is down 18%, FTSE 100 just about keeping its head above water, still up 1.3%. Turning to next week, is fairly light on the corporate calendar, possibly just two stocks to keep an eye out for. The first one being Persimmon. They're going to have some half-year numbers. Share price down 36% over the last year. As we've seen across this sector, have been several shadows which has really weighed down heavily. There's the Help to Buy scheme, which has been revamped, the end of the stamp duty holiday, the possibility of the housing market starting to cool in terms of prices, cost of living crisis, of course, and also specific to Persimmon, there's also been something of a delay in terms of planning permissions as well. All those things have certainly been weighing against it. That being said, when we last heard from them at a trading update in July, there's clearly not too much more that they can be doing at the moment, moving the dials within their own control. Strong cash position, strong balance sheet, an extraordinary dividend yield of around 12.7% at the moment, paying investors to wait. £416 million already spent on land acquisition so far this year, and forward sales worth nearly £2 billion. Even average selling prices in houses are offsetting most of the inflationary pressures. So it's a question of whether sentiment can start to turn on this sector. Also, full year numbers due from AO World. This has had a particularly tortuous year. The shares are down 82% over the last year. They've recently pulled out of the German market, which will previously accounted for 10% of their revenues. They had a profit warning in April. They needed a £40 million fundraising exercise in July because there were question marks around its credit cover, which is something that's particularly important for retailers, of course, and add into the mix the general issues that retailers have been facing, again, with a potential cost of living crisis, again, with stiff competition. It's been a fairly torrid year for AO World, and let's see whether there's any chinks of light emanating from their full year numbers. Thank you for watching. Have a great week.